more you focus on quantity, the less you focus on quality. And what that means is the more you focus on buying stock, the less you focus on how good the stock is. But dividend companies are great because it's steadily passive income, it's durable business models with steady cash flow. They have chlorides went up almost over 60%. So, I mean, you see that their highest payout ratio was back in 2007, it was 466, and monthly contribution is just $45 a month. 15% interest rate over 35 years, you will have over $500,000. It might ask you, do you want to drip? You might be like, man, I'm dripping today. I got on this shirt that make you hallucinate, man. I'm dripping. That's not what we mean in the stock market. Stock market drip means dividend reinvestment plan. What's good, YouTube? A Disciplined Diamond Hands back with another video. I'm not a financial advisor, but I do have disciplined diamond hands, and I will make sure I give you some informative content every second of this video that you're gonna have to write down on a piece of paper to remember. We're going to start getting into this ASAP, like right now. I appreciate y'all for my one video. Y'all running it up crazy. One of my videos look like the stock market. It's just going straight up. It's bullish. I was reloading it every night. The views going up 20 views every time I reload it. And I gained like 2-3 subscribers in a day. I'm feeling good. I'm gonna teach y'all something new that y'all can use to your advantage, just because I like teaching people and y'all like showing me the support. So let's get into this. First thing first, we're going over what is the dividend, perks of dividend stocks, how to buy on Robinhood, analyze screener, EMA, fundamentals, ratios, and earnings. Choose 3 stocks to research and hold. You only need 5 to 10 holdings in your Roth IRA. See, my Roth IRA consists mainly of these top holdings right here. You don't need multiple holdings. The more holdings you have, the more you focus on quantity, the less you focus on quality. And what that means is the more you focus on buying stocks, the less you focus on how good the stock is. Because if you don't spend 1 hour studying why one stock good, you're just gonna spend that 1 hour trying to find 10 stocks that are bad just so you can, say you're an investor. But that's the slideshow that we're going over. We're going to start with this first. 10 dividend stocks with high growth by Disciplined Diamond Hands. Y'all read all these. This is by Investopedia. That's my source. I'm gonna read the highlighted parts just so I don't be here for 3 hours, because y'all might think I read slow, bro, and I might do. But a dividend is a distribution of a company earnings to eligible shareholders. Many companies don't pay dividends and instead retain their earnings to be invested back into the company. The payout ratio indicates the size of the reward that the shareholder gets for buying and holding stock shares. But a high ratio is not always good news. A low or no payout ratio may signal that a company is reinvesting earnings into expansion. A payout ratio above 100% indicates that the company is paying out more in dividends than its earnings can support. Okay, first thing first, it says some juicy things about being a dividend company, and some don't pay them. Usually mature companies paid out dividends, so that's one of the perks of having a dividend company. I forgot it's on this slide. As well, I want to show y'all payout ratio real fast. So as you can tell, UPS been since the 1900s. UPS been operating since the early 1900s, and as you can see, they pay a dividend. Why do they pay a dividend? Because they're a mature company, and dividends entice investors to invest in the company. But let's check this out. The payout ratio is 97%. This thing just told us a payout ratio above 100% indicates the company is paying out more in dividends than its earnings can support. So sometimes you may see negativity about, this stock paid good dividend, but the payout ratio is high. The payout ratio is important. The CEO of UPS supports the dividend and says they have enough to cover the dividend. So that's great, unless the CEO is lying. We can also check out the history of their payout ratio. All we have to do is click on more info, and this will tell us by the year that their dividend has been increasing since 2005, unless my eyes lying on me, you feel me? But not only that, we see that their highest payout ratio was back in 2007. It was 466. That's crazy. It's 274 here, and it was, yeah, it was very high previously. But Clorox is high as well. But yeah, there's another here or there. It's let's keep going. Yeah, we're gonna keep going. We're gonna keep going. But dividend companies are great because it's steadily passive income, it's durable business models with steady cash flow. They have proven track records since they're mature companies. Demand stays strong during a recession. Check this out real fast. Remember the COVID pandemic and the stock market pulled back like 35%? Well, this was the beginning of 2019 during the peak or during the start of it. Clorox went up almost over 60%. So, I mean, demand stays strong during recession. Hedge against inflation, good companies raise dividends in line or above inflation. DRIPS allows you to buy more shares and increase compounding power indefinitely. When you buy dividend shares on Robinhood or any platform you buy it on, it might ask you, do you want to drip? You might be like, man, I'm dripping today. I got on this shirt that make you hallucinate, man, I'm dripping. That's not what we mean in the stock market. Stock market drip means dividend reinvestment plan. That means once they pay you that 5%, it's going to buy you more shares with the dividend it pays you. So the more it pays you in dividends, the more it's going to compound, the more it's going to pay you indefinitely, because the dividends is paying for the appreciation to make it be on steroids and make it work for you. And that's what it's gonna do. Next, we got Robinhood. How do we buy on Robinhood? First, you need to add some buying power. See, my buying power is 9,999,999,999,099. That's my buying power. Then once you have some buying power, you want to type in UPS, click on it, click on trade, click on buy. Don't trade options. A lot of people fail because they try to be a trader before they are an investor. If you try to be a trader before you're an investor, you won't understand like the flow of asset prices. And then again, bro, you won't understand risk management and psychology, because if you're a trader first, you're gonna put all your net worth into trading. Then when you put all your net worth into trading, you're gonna put all your net worth into 1 or 2 trades. And it's like, bro, if you trade and you ain't got the mindset of investment will pay you long term, you ain't got the mindset of buying a great asset. When you start trading, you buying any company and it may not be an asset, you feel me? When you're an investor, you're focused on the right assets over how many you got. So that's why you don't need more than 5 to 10 if you're an investor. But yeah, add your 10, click review, and reinvest the dividends. The easiest way to save 500K is initial investment 15, and monthly contribution is just $45 a month. 15% interest rate over 35 years, you will have over $500,000. How can you do that? How can you get 15% of SPYs only doing 10%? Invest in VU and CHD for diversification and passive income. Then invest in undervalued companies with profitable futures within those 2 ETFs. Like UPS right now. UPS is in the not just UPS, but some of these companies are in the dividend ETF, and most of them are undervalued right now. So these have the potential to take off, 116% plus, way more than the ETF. So it's like, yeah, it's cool to invest in the ETF, but when it's time to really make some money without the ETF, look, this stock price is going up. Let's redo this. Clorox has the potential to go up over 100% once it breaks new all-time highs because it's undervalued. If we look at SCHD, I said that's so wrong. If we look at SCHD, for it to increase over 100%, it has a lot more runway to go than Clorox. So what that tells you is Clorox definitely have a better setup, a higher growth potential. So it's like, yes, you want to be in safer things, but then again, you can expedite this growth by buying undervalued assets at the right price. Like UPS is undervalued at this level. You know, stop loss right there. Take profit above new highs or right below new highs, 137%. This is how you would expedite your, like, LEN. I copped LEN right here. Stop loss, you know, right there. Nothing above 30% should be a stop loss. And boom. We got these on the list. They could continue to slide down some more. Let's make sure we're done. We're done with this. Let's go over things on this list. We already went over that. Analyze the screener. So this is the screener you need to have set up if you're a beginner. Set this screener up and then tailor it to your style. You can also have multiple ones. But yeah, add this button here and put everything on here you see. And then click this add button right here and put everything you see. There's no right or wrong way to search for stocks, you know? Because some of these have positive free cash flow, and then if they don't, they will have positive free cash flow in the future. So it's like you can really tailor it. But yeah, we're gonna start off first with, I guess, what UPS, since I like UPS the most. Their net margin is 6%. It should be above 10%. The equity is great. Dividend yield is great. Free cash flow is not great. Return on equity is great. Current ratio is great. Everything else is great. Dividend growth has been 15. I just added this tab last night. That's cool. Let's also check this out. I think we already went over payout ratio, but like they said on the Investopedia told us, anything above 100% is a red flag. UPS is approaching that red flag category because it's approaching 100% payout ratio. But at the same time, their payout ratio was above 400 at a certain time, and they were still able to pay it. Their payout ratio is at 97 now, and Carol still got high benefits and high hopes. The CEO still got high hopes and determined that they'll still be able to pay their dividends. So yeah. Let's keep getting into it. But yeah, it was 400 back then, 274. So honestly, I feel like they can recover if they want. It was 262 right here. And yeah, I know they're gonna recover. All right, so next, we're gonna go over how to set up your indicators to help you win in investing. First thing first is what we want to do. You need the RSI indicator. RSI indicator helps me out the most. Relative strength index, add that. Then you want to add the EMA, moving average exponential. But once you add those, you want to change the settings on both of those. 200, make it look like this. Screenshot, keep it the same. Because once you put your EMA to length, it won't be 200. It's going to be something else. And you want that 200 EMA because it's the best for long-term holding. This your RSI settings. The default is 14, I believe, so it might already be the same. There's my settings screenshot. And yeah, let's get into it. But how can the RSI help you make money on UPS? Well, because I'm a circle half. Every time it gets to the bottom of the RSI, it takes off. On to the next, Clorox. How can Clorox help you make money? Well, it's holding a 200 EMA right now. And every time it got near it took off, since it ain't break below that in 1985. I'm not saying that they never will, but now that they're holding that on a monthly, they're approaching that 30 RSI level. They're approaching undervalued, oversold levels as well. They're also at this macro support area. So yeah, and they're paying that good dividend as well. The dividend payout is 3.94%. LEN pays the smallest dividend, but it has appreciated the most within my portfolio out of everything on this list. That's why I added it. Hormel Foods on the 1 hour, they're near oversold levels. What could they do? I'm unsure right now. They got a little area of confluence right there. They got this area. Let's see. I don't know. I don't want to see them go that far. They're already oversold, but they're not oversold enough. They might just keep coming down a little. On the weekly, they oversold. They might come down more, but it's just something to keep your eyes on. RHI is oversold currently. Boom, right there. That was a nice one. That was a nice one. It really took off there. Took off here. Took off a lot. Not only that, it's at this support area again. Target is at this resistance, past resistance area. Bounce area. It's here again. It's showing a little divergence as well. Got some divergence going on. Got this going down, but RSI is going up. So yeah, Target is looking good. I was liking JJSF honestly, because my thing is, bro, I ain't never got to risk more than 30% on an investment, but the investment will always pay me more than 30%. Why? Because if it's already below a 30 RSI, it's a low chance that it's gonna keep going. The lower the RSI you buy it, the better, because the lower it'll go. You feel me? We got an area of confluence right here. What is it? Yeah, 30% stop loss. I don't see it going down there. Let's check the monthly. On the monthly, it's right there at the 200 EMA. They broke that. So I mean, I would personally let it chill. I'm gonna see where it hold at now, and then go from there. But a lot of good companies are on a good dip, and it's like, look at these industries. We got the process industries on a good dip, consumer non-durables on a good dip, commercial services, retail. So look, consumer durables, home building, consumer non-durables. If any stock is overvalued right now, let it be. Put your money into the stocks that are undervalued because they're safer, since they're at a support and a demand, and they're undervalued and oversold. Buy them because you can risk less than 30% to make over 50%. But if you buying something at all-time highs, then you can also profit, but it'll just be more risk. You feel me? We got Dow on the list. We got BFA on the list. We got them on the list, and we got them. Appreciate y'all for tapping in.